Good morning. Happy Friday. All right. So top of the range, basics, support and resistance. Where there were buyers before, well, this was the third time. So that was the higher probability situation. We like W's. We like W bottoms, but not so much after a crash. Well, that's an exaggeration, a little mini crash like that. And this type of a pattern, that is not the desirable scenario there. The third time there is likely to be more successful. And, as we reviewed in prior pre-market, analysis, this consolidation and this correction bar was the setup. Now, prices are at the prior high. This is a short-term uptrend at an area of major resistance. So technical analysis 101 is that there are sellers at prior highs and there are buyers at prior lows, and there are sellers up here. We saw that yesterday as prices couldn't push higher through the high here. At the end of the day, prices backed off a little bit. Not a big deal. If you remember yesterday, we said our first reference point of support from this time frame was the prior bar's low. Never got there. I said as just a more of a subjective, but it's a starting point without looking at intraday charts, is to say that it should stay above the middle of the range. And it certainly did that. Never even retraced into the range at all. So that was clear, obvious strength. Now, as it pushed up there at the end of the day and, the buyers didn't follow, things backed off. So we got a topping tail at resistance, which now suggests the higher probability of breaking down through the bottom of yesterday's low. Well, of course, we're not even close to that yet. So now prices have come up into the exact area up there. Let's just get rid of all this messy stuff. And sellers are up there. You can see it. Here was a little breakout. And this is, I don't like to use the word dumb, but it's dumb, right? Buying a breakout after multiple days up into major resistance on a smaller time frame is dumb. And so now it's come right back in again, and looks like it's going to push under the bottom of the base. And those buyers that bought that breakout are going to be selling at a loss, and they're going to be wondering, why did this nice breakout pattern fail? Look to the left and see where things came from. It's simple, but so many miss the most simple, basic thing as to the probability of a pattern in a higher time frame working out or not working out if it's not in alignment with a higher time frame. So now we've got prices coming down into this area of support, and buyers are going to show up here and give it a try. But the depth of retracement here suggests, it tells us of the weakness, and it suggests that it's going to probably go lower, especially now that it's in alignment with this major support. So that's where we are going into today. We'll see if maybe buyers, maybe they can pull off a miracle here and get it pushed back up. So we'll be watching for that. It is at support. So as intraday traders, we don't short here either. Right? This is where we wait for a retracement, or if it chops sideways. And so if it comes all the way down here after this long run on the 5-minute and it can't rally, right, which is what this suggests should happen, and it chops around sideways, well, maybe we short this today, right, for a day trade. And then we'll see whether this actually turns into a red bar. All right, let me get rid of my little dot here so I can move to the next chart. Qs. Now, the Qs, which were the laggard relative weakness, and look at the way it's coming in here. It's not up at this resistance. So that might seem more attractive as a day trading short because of the relative weakness. But I think because of this strength and at this resistance, if it could break here, I think this one is going to be the better one for a short. Now, there are these little reference points here over to the left, but based on the daily time frame, That leads me to believe, just based on historical patterns, that it should be able to push through that. And that's, we just wait and see what happens when it gets there. Dow, it's up at this resistance area, similar to the S&Ps. Kind of surprised that it didn't push up to a new all-time high yesterday. The media jumping on board to, say, hey, new all-time highs, yada, they put on the party hats and all that. That didn't happen. So we'll see if it can peekaboo up there today, or maybe it's going to chop sideways. I mean, yesterday did turn out to be the frog in the blender type of a pattern, commission generator, as I called it yesterday morning. Pretty choppy price action at that resistance. And then when it just couldn't get going, it just gave it up a little at the end of the day and formed a topping tail. The Russell, right? That was the big winner on that move off of the low here. We talked about how the relatively weak ones can bring up the rear, and that had a beautiful rally up into resistance. And at this point, even though it's holding up here better than the others, and this isn't a tail on the top. It's a small green bar, but it's at resistance, and while it hasn't rolled over yet, well, it has on the 5 a little bit, of course, but while it hasn't really rolled over to the extent the others have, it should. Maybe it'll hold up around here, and we'll see. One thing to realize is that when prices run up into a resistance area and it's had this move, the turnaround day, what I mean by that is, if today was to turn into a red bar or a topping tail, or even let's say it closes green, and on Monday, it has that probability of turning into a red bar. Those turn days tend to be really tricky because buyers still have a lot of confidence at this point. They haven't really been dealt, slapping around where things really, failed in a big way. So they don't give it up so easy. And so you tend to get pretty choppy until things begin to reverse. And that's where things on an intraday time frame begin to trend lower. Daily market up substantially now and into resistance, need digestion and pullback. That's the basic thought when prices run, multiple bars up into resistance, Tony, is that is what is very likely to happen, because historically that's what happens. Now, if we go into next week and let's, I'm just picking a day. Let's just say by end of day, Wednesday, Thursday, things are going sideways up here. I mean, we got the Fed thing, I think, what is it, Wednesday next week? If things are chopping around sideways where traders are saying, you know what, the Fed's going to lower interest rates, something's going to happen, this is going to go up, I'm not so anxious to sell. And we have some choppy price action going on here where it's absorbing the supply. That's the concept from MTS. How do you read absorbing supply? Prices run up into it and they chop sideways. Sometimes we call it bullish price action, where rather than retracing, having a time correction, a price correction, right, where it pulls back through price, it chops sideways through time. And so going sideways absorbs the supply, it's bullish. And so maybe prices pop higher on that. We'll see what happens next week. Right now, black and white, we know that risk has risen on the long side, meaning breakouts tend to fail. On an intraday basis, it tends to be more choppy. So, patterns like this don't make a whole lot of sense to trade them until you actually get the reversal. Or unless you're a, trading intraday and you're nimble, right? So that definitely can be done. And, you pick the right one. This is, as I'm looking at this now, it's not the one to go to and pick because it's showing the strength. This hasn't broken on the hourly chart yet. It's at major support. So this will need a little bit more time to actually prove itself from a bearish, short-term bearish point of view. And we'll see what happens. This might actually rally from here. And so, we have to wait because we don't have that alignment yet. Uptrend, uptrend, major resistance. The 5-minute has not broken yet. So we're going to wait and see what's actually going to happen. If it does break, as I said, these points down here, as a nimble intraday trader, you can trade here to here, but I don't know what will happen up in this area. But these should break based on this if it's going to have that price correction. If it holds here and it pops back up again and it starts chopping around, we're saying, this might actually turn out to be a correction through time, because buyers are aggressively stepping up at these little minute little support areas, which would be bullish. So trading is about assessing multiple time frames, money management, all the things that we talk about here, and then seeing what actually happens. What actually happens, right? We know historically that this is at resistance and sellers are going to be here. What actually happens? Some people call that the hard right edge. It's the unknown. So you look at what is, you place a trade with calculated risk, money management, and you see what happens. If you want to know absolutely what's going to happen, well, you'll probably sell the low and you'll buy the high because it'll be pretty obvious at that point. IWM, equivalent support, such as that. This is not 24-hour, but I would say right here, right? That 156 and change area, those swing lows right there. So this, you can see this little low right here, and then the next one right there. If you want a guarantee, buy a toaster. That's good. If you want to say on the ES, given that void there on the daily, do you need to wait for an M top or short entry, or can you just short it on the turn lower? Good question, Sean. So Sean is saying on the ES, this is made the turn lower. So can you just short it there? I guess in anticipation that if it's going to retrace, it's going to form an M top up here, or maybe a lower high and then break. Yeah, you can do that. You can do that. Right? So if you were to put your stop, somewhere above this level up here, anticipation that because of this pattern, it'll form an M top and eventually break. Of course, yes, you could do that. Money management allows you to do pretty much anything, meaning like, Greg, short the S&Ps. Okay. Don't you want to look at the chart? No, it doesn't matter. Money management. What are you going to do? I'm going to short one contract and whatever happens, happens, and I don't care. So at that point you say, you might say, after 30 minutes, you can look at the chart and you say, oh, I got him now. Well, no, you don't, right? Because I know how this thing moves, and, in that amount of time, I'm not going to get hurt because my money management is going to allow me to withstand pretty much whatever happens. Now, if you told me you want to go and do that with some little biotech stock, it might get me to shy away from that, right? But in any event, you get my meaning.
Hey, Greg, when I was teaching the courses in-house, I had that as one of the exercises. I gave everybody 5 arbitrary stocks: buy Apple, short Facebook, do this, do this. You now have 30 minutes to manage them to profitability in the next, based on a whatever 5-minute, chart. And that it really sunk in how we're just being risk managers. It's that simple. So like you said, I don't care if I'm long or short, I'll manage it.
Right. And we're all guilty of it. You may hear me, you're hearing me say this stuff and think like, wow, believe me, I've made every mistake you could possibly make, so, all of these things drill into your head, especially after you make the same mistake 3 times, it's like, come on, wake the hell up. And, so you just come to realize as we look at patterns, because we're pattern traders, and we see the high probability of those patterns, you get connected to an opinion. And if you don't use proper money management, which accepts the fact that you really don't know, because if you did, right, you'd become a gazillionaire tomorrow and you'd risk everything you have because it's a guarantee, and it's not. So you don't do that. But a lot of people swing for the fence and they get taken out of the game. Let's continue. Oil is just a giant mess, but it's impressive that it came back from here. It basic support and resistance. It came up to the high, it got slammed back down. And this could be what happens today in the markets. I don't know, but it's it's not the same pattern, of course, but resistance and support, basic stuff, support and resistance. So now it's within the freaking maze mess, call it whatever you want. I just don't know what it's going to do, so stay away. Bonds are down here again, breaking lower. The stock market should be ripping through the old highs here. So this is rather interesting. We talked about since last week the slowing momentum, but it was still in an uptrend. There was major support. Now it's broken and the market's rallied. And now they're continuing to go down. Interest rates are going up, which is improving the big concern of an inverted yield curve. That's a big move in a short amount of time from the cliff, and the markets are not rallying here. So that's another thing that says buyers are, hesitant, as they should be. So while this is an improvement from what was, yield curve, yada, yada, markets are not rallying here. So be nimble today. The markets have not turned, but they're at resistance. Gold coming off of the low after it broke major support here. So maybe it's a trading range. If this was to break below here, that 50 MA is probably not going to hold since it's kind of refueling the tank here. So we'll need to see right now whether it can actually turn around. But the angle of retracement here is not bullish the way it came down so hard. We had a little bit of this conversation yesterday, and where in the room where I said things that pull back like this in an uptrend, an angle of retracement, the better trade is to wait for a W bottom, which I use the terms repairing the damage. This has created damage. A correction through time, retest and failure pattern repairs the damage, and that's a better long setup. And we know this is in an uptrend on the weekly chart. So that would be something next week if it was to form that way. Silver is dangling around here. This could drop a decent amount. So you can see the support there on the hourly. Last thing I want to look at is the transports. And you can see here's the beginning of a turn day at resistance. Pretty basic stuff. Basics work. It's putting together all the different basic components that makes a strategy, right? Just support and resistance is only one piece. It's an important piece. Trend, support, resistance, multiple time frames, relative strength and weakness. All that is what creates a strategy. I don't want to forget our friends on YouTube here. You think you made a mistake. I put an Iron Condor on Disney. In pre-market, it looks like it could blow past 139. There was some news about Apple and Disney today forming a alliance, or so I don't know. Time template, 24-hour, and your Condor 139, pretty tight. I don't know what it's going to do when if you were going to do a Condor, you should have done it above the swing high here and down there. So Apple is down. Bismarck, you might be okay, but doing spreads that tight, you're going to get more premium, but obviously more risk. Boeing still strong. Yes, it is. Up at the top of the range is the market, so it's likely to stall here. Right? And Microsoft and Disney. Thank you, Paul. All right, Microsoft and Disney. All right, all yours, Dan.
All right, good morning. Yeah, we took profits on Boeing there at the high. And we closed not Disney, Diamonds yesterday for a penny or two put spread. And we have Diamonds in the ETF trader, which is the alert I just sent out. Weekly, we have half a lot, a Google put spread for next week. We covered half yesterday in the strength, 50% max profit. ADI, we tightened the stop yesterday. We have put spread way under here for next week. And finally, NVIDIA we tightened the stop yesterday. We closed out the one that expires today. We still have the one for next week. I'm just guessing that this might be down on Avgo. I had earnings, Broadcom. I don't know. I'm just guessing. It's down for some reason. But I tighten the stop. You know, that's what I do. Swing and options trader, Cara. It's kind of just a dead trading range right here. It's a marijuana stock, our eGov. I moved the stop up yesterday, finally broke out. Expedia, we legged into a covered call yesterday. Google were a long stock also, and I tightened the stop. JCI, long stock. Kellogg, long stock. Also just trading range, doing nothing. But above the 20, bullish weekly. MEI, long stock. We've been in trail mode, and we sold some yesterday. MR, a little oil stock, doing very well. We nailed the entry right here on this breakout day from this big retest pattern. NEOG, we're in trail mode, long stock. NXPI, we're out of 2/3. We had a beautiful 1, 2, 3 right here that we bought, a bull call debit spread. Old Okie, oil stock, breakout daily, weekly, we're long stock. Square, it's our only short, and it's doing beautifully. We are in this 58.90, so we're up 250 already. I'll be looking to take a third into weakness. Tell, beautiful 1, 2, 3, 4 pattern here. We're in trail mode. Urban, I moved the stop to yesterday's low. And finally, whiskey. We have a covered call for next week. Beautiful bull flag here. Here's my flag pole with a gap, flag, gap up, and that was the day we entered. Beautiful weekly, price void monthly, so that's a core trade to us. Folks on YouTube are asking about Pan W and Shop. Pan W, it's not gapping. It had there's no pattern here, so I'm not quite sure what you're looking at it for, but this had a bullish gap up, sloshing around here, red, green, red, green, red, green. So it's in a little crazy trading range. But yesterday's red bar, we have, based on retracement principles, greater than 50% into a wide range bar. Shouldn't happen, makes it questionable. And this one went, closed 80% into it. Sold off all day long, couldn't bounce. There's no pattern here for me. It's a big mess. Shop came down very hard, stabilized. There's no compelling pattern to go long or short other than if you get something as a day trade. And here's the 15-minute chart, upper left. Even a day trade, I got nothing right now. Nothing. Gapped up, came back to support. But so Paul McGraw's asking me about put spread. McGraw, that is step one on our trade sheet, right? No pattern, no trade, no pattern, no trade. So I just got through saying, at least to us, there's no pattern. This is a bounce in a nasty 3-bar collapse. It's just, it ain't my style. When we go to the buffet, you're going to this food line and I'm not, AMT, somebody emailed me asking about this and also came down hard, but they're fluid bars, bullish gap yesterday, closed near the high, bullish 15-minute chart. So this actually is an example of what Greg was mentioning. An ideal would be a retest, a W bottom. Wow, Qs are at the low here. Qs just after the gap up to resistance are just grinding lower. So this one's a watch. I actually mentioned yesterday that this would be a great put spread if there was any juice for tomorrow. There wasn't, but this is worth watching. YouTube's asking about workday. It's in a downtrend. This was a bear flag. In fact, I put a little lesson markup in our Facebook group. Here's the flag pole. Here's your counter trend trading range. Breakout failure, declining 20 and 50, broke down again, wide range bar. We actually shorted this under that bar as a bearish 1, 2, 3, 4 breakdown. And, with my tight stops, we stopped out at a profit. Now, you got this green bar, you got 2 inside bars, but you have a downtrend on the 15-minute chart. It still looks lower, but again, I wouldn't buy it or short it right here. Maybe a 30-minute low, because what concerns me is this powerful green bar. Let me blow this up. 60-minute chart. So it would just be a day trade because, see, this big green bar is power. But you do have a price void here for a day trade. Sure. So that'd be fine. All right, glancing at opens. Facebook I see is weak here, but again, no pattern. And I agree with Greg. I have a total day trade mentality now. Hey, McGraw, look at this CMS. So this, see how I came in hard, and it's a bounce after getting shellacked. That reminds me of the other one that we just looked at. All right, our square is falling nicely. So look at that, we're up a couple bucks now. I'm gonna look to cover third here. Let me put him here. Hubs, see another one, came down hard. I had this on my put spread list over yesterday's high. And, you're swimming upstream is why we like the double bottoms. So there's that AMT, see? So I got no interest in him anymore. Hubs, no interest. Mighty Mo. Now this is interesting. we got a downtrend here. We got a bearish gap under this green bar. You know, I think they're having trouble with Congress going after their vapor problems, people getting cancer. So this is a short watch. Mighty Mo. You know what? It's 9:32, maybe 5-minute low. IWM, relative strength. Wow. So I'm going to tell our folks that I'm watching a 30-minute low for now. And this is option expiration day, as you know, so let's look for some credit spreads. And with the market giving up its weakness here, I am favoring call spreads. Nice square. Okay, let's cover a third. Let's just do it right here.